conversations to find out what's going well and not so well. I'm joined by Paul Walsh, the company's chief executive. So, first of all, your reaction to these earnings?
I think this is a good set of numbers, particularly when one looks against the economic backcloth that we've had to operate against.
Now, if we look at the overall situation, sales have been somewhat weak, and this has come down to the situation in the US and Europe. When do you think things are going to recover there in developed economies for Diageo?
I would hope that we start to see progressive improvement. You're quite right. If you look at the first half we reported, it's very much a tale of two quarters. The first quarter, our sales were down 6%. But in the second quarter, October, November and December, we saw sales improve by 2%. There is polarization between the developed markets and the emerging markets, and the US and Europe remains pretty flat. But we are seeing very attractive growth rates return in Asia, Latin America and Africa.
But what signs are you looking for in the US to show you that the economy and the consumer has turned a corner?
I think a critical sign is both GDP and unemployment. I think we're encouraged by some of those signs, but they still have to translate into consumer confidence. That's when the consumer will start going out again and start buying our brands again.
Now, the trend of premiumization, you've been trying to get consumers to buy more expensive brands of vodka or whiskey. Has that strategy been working?
I think in the last 6 months it's proved more difficult, but I have no doubt that once consumers have disposable income and confidence, that they will return to spend that little bit more for the product that they really enjoy. And one thing that's very interesting, even in these times, consumers want quality brands. Brands that have provenance and stand for all of the things that they want. And we have those brands.
Now, you announced a wave of cost cuts last year to help offset money lost during the course of the downturn. Could there be a second wave of cuts? What do you have in the pipeline?
We're still in the process of prosecuting the agenda that we laid out a year or so ago. So there are no further cuts planned at this stage. And in fact, if you look at our overall numbers, we've generated almost £1 billion of free cash flow. We've reiterated our guidance, and we have the confidence to offer our shareholders a 5% dividend increase.
Paul Walsh, thank you very much, Indy, for joining us.